Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now this Ethereum chart shows us that a huge move is coming soon, but this Ethereum chart shows us that the biggest Ethereum squeeze that we've seen in years is just about to happen. This is very likely to result in an extremely volatile move, so make sure you're watching this video all the way to the end so that you do not miss out on any of this important information. And if that sounds good to you, just before we jump into it, make sure to leave a like down below, and if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight to what this video is about. So right here, we're on the Ethereum to US dollar chart on the 12-hour time frame to start off with. And this is just to give you another quick update on that falling wedge pattern that we have been talking about over the past couple days. And for the beginners out there, a falling wedge pattern is more of a bullish pattern than it is a bearish pattern. But we still need to focus on the support and resistance of this pattern, which right now the support is coming in at approximately 3.6k, and this line of resistance is coming in at just underneath 4,000 US dollars. Also, keep in mind, and this is something that I mentioned yesterday on the channel, the Ethereum RSI on the 12-hour chart saw a bounce from the bottom of this RSI band just a few days ago. And the last time we saw Ethereum do that was all the way back here in around the middle of November. And what came next for Ethereum? Well, we saw an immediate bounce to the upside, followed by more sideways consolidation, if anything, in the immediate short term. But as we zoom out to some larger timeframes, looking at the 2-day chart for Ethereum, this is also showing the Bollinger Bands indicator, which is most commonly used to determine when a volatile move is potentially about to happen. And so basically, when these Bollinger Bands squeeze together like that, that is when we're due to see a volatile move in the market, like what we saw leading into August. It's important to mention that no one indicator is 100% accurate, but this indicator still does a pretty good job at determining when a major market move is about to happen. And by about to happen, keep in mind this is on the 2-day chart, so each one of these candles is 2 entire days. So relative to this time frame, that could still mean around 1 to 2 weeks. But basically, the last time we saw the Bollinger Bands on the 2-day time frame for Ethereum squeeze like this was all the way back here towards the end of 2020. And in fact, even if you're looking at the price action at around that time, it was very similar to the price action that we've been experiencing recently. Even though it might feel like it when we're in the middle of the bearish price action, this bearish price action hasn't really been that severe in terms of the loss. We've only lost roughly around 25 to 30% from the all-time high to the lowest levels here. And so when you're comparing that to other bearish price action that we've seen in 2021, for example, during September, and more importantly, during May, the pullback that we've been in over the past 1 to 2 months has not been as severe, but it has been drawn out a lot longer than, for example, what we saw in September, because this pullback has been going on for almost 2 months now. And if you're looking at the past 2020 price action, measuring out from this peak up until the point where Ethereum finally broke back above that peak and fully recovered, basically, that was around 2.5 to 3 months after the initial peak. So measuring out 2.5 to 3 months from the all-time high, that would put us towards the end of January, possibly early February. Obviously, that is just a bit of speculation, but it gives you an idea of what we could experience moving forward for Ethereum for a potential recovery. But now jumping into this very important Ethereum chart. This chart basically shows us the estimated leverage ratio for Ethereum across all exchanges. So that is what this purple line is just here, and it is calculated from the all exchanges open interest divided by their Ethereum reserve sitting on those exchanges. And then this black line just here is the Ethereum price in US dollars on the daily time frame. And I've just hidden my face cam so you can see the data behind me, and what we could see here recently is a massive spike in the estimated leverage ratio for Ethereum across all exchanges. In fact, right now this indicator is sitting at its highest level that we've seen in years. And so what does this actually mean for Ethereum? Well, as I explained earlier, this is calculated by the Ethereum open interest across exchanges divided by their Ethereum reserve. So when this is spiking to the upside, it either means a lot of Ethereum is getting withdrawn from exchanges, or open interest is increasing, or a combination of those two. But normally when we see a spike this massive, that is usually a massive spike in the open interest across exchanges. And by the way, open interest is basically borrowed money. So for example, a bunch of leverage trades that are still currently open. And it is very common for Ethereum to have an extremely volatile move anytime this open interest gets too high. And in fact, quite often when we see these huge spikes in open interest, that comes in confluence with either a major market top or a major market bottom. And so how could we tell if this is a major market top or a major market bottom? Well, we can look at the previous price action. And clearly the price of Ethereum over the past 1 to 2 months has been trending to the downside, meaning that the price of Ethereum right now is clearly not at a market top. So the other option is that we could be approaching a market bottom and getting ready for a major short squeeze. We saw exactly this happen in the second half of July, as you can see, and that was right when Ethereum bottomed out for the last time at around 1700 US dollars per Ethereum just before we experienced a massive short squeeze. And in fact, the next week and a half for Ethereum was the most bullish week and a half in Ethereum's history in terms of consecutive daily candles. And if you were on the channel back then during July, we were actually talking about this happening around 2 days before it actually happened. If you don't believe me, you can even go back on the channel and take a look. The videos are still there. But right now, we are showing the same signs of a major market move coming very soon, possibly within the next couple weeks, just to give it a little bit more room. But honestly, it could be as soon as within the next few days. And how else could we possibly determine the direction of that extremely volatile move? Well, we can look at the funding rates across all of these exchanges. And right now, the majority of funding rates across Bitcoin, Ethereum, and altcoin contracts are below their normal values, which is normally at around 0.01%. And you can see a few of those funding rates in here, but a lot of funding rates at the moment are in the negative territory, showing us that there's a huge amount of short positions currently open. And when you open a short position, the selling pressure is applied immediately, meaning that you immediately sell Ethereum, for example, if you're shorting Ethereum. And then to close the short position, you have to apply buying pressure to the underlying asset. So for example, if you're shorting Ethereum, to close that position, you need to buy back into Ethereum essentially. And on top of that, when we're seeing negative funding rates, that also means that the short positions have to pay the long positions a fee to keep those short positions open, just because there's so many people trying to short crypto at the moment. So obviously there is no guarantees in these markets, but these are the perfect ingredients that we need to see a short squeeze. And the bigger the open interest, the bigger that short squeeze will be. And once again, the last massive short squeeze that we saw was at the end of July leading into August, which of course was incredibly bullish for Ethereum, and we were talking about that around 2 days before it happened. But anyway, in other news, looking at the Ethereum versus Bitcoin charts here on the 6-hour time frame, technically we are still looking at this head and shoulders pattern because we have broken to the downside and seen a rejection from this neckline, which obviously isn't really good for Ethereum in the immediate short term against Bitcoin, which by the way, for the beginners out there, this just means Ethereum is underperforming against Bitcoin in the shorter term. But this doesn't necessarily mean that Ethereum is bearish against the US dollar, because for example, if Ethereum pulls back on this chart, that could mean that Bitcoin is just seeing a bigger gain than Ethereum, for example. But anyway, the technical price target for this pattern is coming in at around 0.07 Bitcoin per Ethereum. But if we break above this neckline again, that would invalidate this pattern. And this neckline is coming in at around 0.079 Bitcoin per Ethereum. And if you want to get extra crypto content throughout the day, make sure you follow me over on my Twitter. And the link to my Twitter is in the description down below and also in the pinned comment. If you got anything of value out of this video, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. And before you click off, make sure you're checking out one of these uploads if you haven't already. And as always, I appreciate every single one of you on this channel. I can't thank you guys enough for the support recently. But anyway, that is everything for today. I really hope you enjoyed, and I'll see you all in the next video.